Hello everyone, welcome to Elliott Wave YouTube channel. This is Henry and today is Thursday, April 21st, and the time is around 1:30 a.m. GMT. And for today, we are going to take a look at the chart of the GDX. This is called Miners Index ETF. So we can see we ended with 5 over here and in this intermediate degree, and this wave 5 ended with 1 in the larger degree, primary degree. And currently we are doing this correction, which is basically wave 2, right? So we are now in the wave 2, and within the wave 2 it will be in a zigzag in the form of an ABC, right? It's a 3 waves pullback ABC like this, okay, in which we are now ending 1 of A and then now doing a 2 of A to correct this 5 ways down, and as long as we stay below 4160 we can then turn lower again to continue the correction to the downside. Okay, so shorter cycle, looking for the correction, but it is turning down, and since we are labeling this as a 1 here, so technically this is actually bullish. It is actually bullish, right? And this pullback then is going to be counter trend, and of course counter trend can always fail, or trend can always extend. That's the principle. Trend always can extend, counter trend can always truncate earlier than expected. So that's something to keep in mind. But let's take a look here in the larger degree what we are looking at here. Okay, so I'm looking at the daily time frame, and I'm putting the 5 and 1 that we see here in the 45 minutes chart in the daily time frame here. And if this is a 5 ending a 1, so then we need to find out where's the 1 and 2 and 3 and 4 in the blue degree, in the intermediate. So this will be your 3, right? This will be a 4, and then the 1 and 2 would have to be over here, 1 and 2. Okay, so we are talking about a 5 waves up from the September 2021 that potentially could be finished. Now if we look at the RSI, we do see a divergence here, typical for a wave 5. Alright, so far this count still looks okay. Now of course if we continue to go up, remember trend can always extend. If we go up again and then breaks higher, let's say, and then let's say in the RSI suddenly is erasing like this, like it breaks to the upside and makes a new high, then there is a possibility, for example, that this becomes some kind of a nest, 1 2 here, right, and another 1 2 here, right? It could be a nest like this, or it could be counted as a like this, 1 2 3 4 5, something like this. It's not good because the 3 and 4 looks a little bit out of place here. But if the RSI divergence is erased, then this could be actually is already in the wave 3, right? So I think the key here is going to be this divergence here. Now as long as the divergence is intact, it's not erased, then this view is the more conservative, and also at this point looks pretty good. It looks pretty good so far. Okay, so I know that it is actually a speculation that we're going to be looking for a bigger pullback, because from the September 2021 it's been rallying very nicely and very strongly. But remember, we do need a pullback, right? I mean, it's kind of, we have rallied quite a lot, 28 to 41. That's quite a lot of move, and we do need some sort of rally, some sort of pullback. And if that can happen, then again we could be looking for a slightly bigger pullback this time. So it's going to be a break for a few months, I guess. So you're going to be only starting the pullback in which you're going to have a 5 ways down, right, ending A, right, and then you're going to be looking for a rally and then a pullback again to finish the B and the C. Before then you start the next big move to the upside again for GDX. And in a way, this is also going to tell you what's going to happen with the gold as well. Right, gold and precious metals, it can get into sideways consolidation or sideways to lower. If this is really going to be playing out from the GDX, then we could be sideways to lower for for a while. Right now, notice here it took this is September 30th, so let's say October, right? October 2021. So this entire move, it took November, December, around 5 months, right? So we got November, December, January, February, March, and then now we are in the April, right? Almost 5 to 6 months. So let's say, yeah, okay. So this is a um, 6 months rally. So this it could take half the time, right? I mean, distribution wise, if this took 6 months, if this is really going to play out and it doesn't rally again or erase the divergence, we could get into sideways to lower for the next few months, possibly at least 3 months, 2 to 3 months. If the drop is fast, then maybe it can be faster than that, but at least expect like a few months here before this is ready for the next leg up again. Okay, so that is the idea, guys. Again, not necessarily bearish at this stage, because again, trend can always extend, divergence can get erased, and it can become more aggressive, the rally. But so far this looks pretty good with the divergence here, so this could be the count, and it's a more conservative count. And so now looking for a larger trace pullback before the next leg higher happens again. All right, so that's the update here for today, guys. And as always, if you do want to get regular updates on GDX or any other ETF, stock, indices, commodities, feel free to subscribe our plan. We have 14 days trial. The link is provided in the description of the video. So I'll see you all again next time. Have a nice day, everyone.